Hi, welcome to Wall Street Confidential. Deborah Borchardt here with Jim Cramer. So Jim, Fannie Mae, Freddie Mac, game over?
I've been saying they're insolvent for some time. One of the things that we learned in 1990 was insolvent does not mean bankrupt.
Okay.
When a company's equity is no longer representative of an entity, that does not mean the entity has vanished. What it means is that there is a recapitalization where the company goes to the bondholders. In this particular case, because of the company's quasi-nature, a government-sponsored enterprise, we don't really know what will occur. Now, we know that Bill Poole, who is an incendiary fellow, who was probably the single biggest obstacle to cutting rates when it still would have mattered. And remember, my theory was you cut short rates dramatically so that banks could have taken their deposits and reinvested at 4% on the 10-year. That arbitrage is what really helped us in 1990. Poole fought that, so it is rather incredible that he's come around to my view
yesterday saying
that it's all chaos here.
Insolvent.
Right. I don't think the market's ready for Fannie and Freddie to go down, but I think it's going to happen. And
these are big numbers because we're talking about $29 billion in mortgage paper,
right.
and they're throwing around the
$5 trillion. $5
$5
trillion guarantees. Now
and you put that in perspective with the total federal debt is $9 trillion.
Right. So what happens here basically is that the government would have to take over these companies, infuse them with a lot of capital, give something to the bondholders. It's not really clear whether the bondholders would want to even own this new company. So maybe the bondholders get paid off, or they're there's two pieces of bonds here. There's the bonds that are issued by Fannie, and those of mortgages combined, and those have always had the implicit guarantee of the full faith in government, right. Just implicit. And then there's the actual bonds that are Fannie Mae paper. And that I don't know what will happen to those. Maybe those get crunched. You would think that maybe that's happening because the amount of money that Fannie Mae has to pay, the spread over treasuries is very big. I look at Annaly Capital, NLY, as an indicator of what's really going on, because what they do is they buy Fannie Mae paper, all different kinds, including the pass-throughs, including the mortgages, and they arbitrage them versus treasuries, and that stock is down precipitously today. So my take is that there's still nothing to bottom fish here on because the equity may be wiped out. Okay. You could be in an MBIA AMBAC situation where there's this little stub of a stock. And they have to recapitalize it. They have to issue billions of shares. But that will not, or Thornburg Mortgage was like that. But it's more likely that the government recognizes that this is a black hole. They've got to step in. They have to buy the entity, crush the common stockholders, and start all over again.
All right, Jim, thank you for those
thoughts
on Fannie.
It's
not
a
good situation.
No, it's dire.
And hopefully the people that we need to be paying attention
Cognizant.
to this are
right. Deborah,
acting.
that's exactly right.
All right, great. Thank you. You've been listening to Wall Street Confidential. Jim Cramer, Deborah Borchardt. Stay tuned for more.